Hello, Tim Kerin here from Mortgage Choice in Kingsley. I think it's time to talk about the difference between principal and interest only, because to be honest, with the way our industry has evolved in the last 5 years, the way I talk about that now, the way I understand it and its implications is quite different to when I started being a broker 15 years ago. Things have changed. One thing that's changed, probably the most obvious thing that's changed, is that those two different types of loans, two different types of amortization, I'm going to say. Feel free to Google the word amortization if you like. The difference between principal and interest only now costs different interest rates. When I started being a broker 15 years ago, the rate was the same regardless of whether you went interest only or principal and interest. Nowadays, generally speaking, in almost every situation I see, interest only is a more expensive rate, a higher rate, sometimes by 0.2, 0.3%, sometimes by as much as 0.5% or even 1%. And that's changed a lot. The gap between those two has come down in the last 3 or 4 months, but certainly 6 to 12 months ago, we were seeing regularly a gap of 1%, and I don't know of any reason why that gap might not widen or shrink again. It's all based on the market now and what government departments are allowing and encouraging lenders to do behind the scenes to control how much of their lending is principal and interest and how much of their lending is interest only. So that's the first point to note. The cost is now different, and that wasn't always the case. So in the past, you might have been aware of an investment strategy where you buy a property and put a tenant in it, buy an investment property, claim the interest as a tax deduction. Not that I'm saying you can, but many people do that. And then go on an interest-only loan, because it doesn't cost any extra interest to do that. Just pay the minimum on that loan while you concentrate on paying other debts, for example, your home loan, which might be a principal and interest loan. In the past, that was an easier decision because it didn't cost any more to go to interest only. Now it's a more complicated decision, because if you want to go interest only and improve your cash flow by not having to pay principal, you are going to get charged more interest. And so whether or not that's a good idea tends to depend on some more factors: the tax deductibility of the interest, how long you intend to hold the property for, and so forth. And that's the point where it's an interesting discussion to now have with your accountant about whether or not interest only is a good idea, given the extra cost of doing so. And that extra cost is variable depending on the lending situation as well. So it's a more complicated thing to analyse than it used to be. So yeah, that's the first part of it, is thinking about the cost difference and how that should impact your decision. The second part of it that I think is really worth pointing out is you can't just extend an interest-only period on a loan these days without being reassessed in almost all cases, as we've now been discovering over the last few years. So traditionally, I've seen many people build up a portfolio of properties by buying an owner-occupied property, paying principal and interest on it, buying an investment property, asking for, say, a 5-year interest-only period, buying another investment property, asking for another 5-year interest-only period, with the plan on an ongoing basis for potentially decades of simply extending the 5-year interest-only period each time it comes up for expiry. What we're finding nowadays, though, is you can't simply just ask the bank to extend it for 5 years. They are nowadays under an obligation to make sure you can afford the repayments when it goes to principal and interest, and reassess that at the time when you extend your interest-only period. So if you get 5 years down the track and you want to extend your interest-only period, and let's say you are semi-retired, you've gone from 5 days a week down to 3 days a week, or you've lost your job, or your financial situation has changed completely and your borrowing capacity is no longer the same as it was, you might be in a situation where the bank won't let you extend your interest-only period, and the loan will revert to principal and interest. When it reverts to principal and interest, it probably qualifies for a lower rate, but now you're having to pay principal as well. So I think if you're planning on building an investment portfolio, or you currently already have one, a property investment portfolio with investment interest-only lending in there, I think it is highly prudent, and far more prudent than it has ever been before, to think about what happens when your interest-only periods expire, and think about what you're going to do if for some reason you can't extend those interest-only periods, because it's no longer a foregone conclusion that you're easily going to be able to. If you still have borrowing capacity, you should easily be able to, but you still have to go through the loan assessment process, which is a lot more mucking around in paperwork than it used to be, purely to extend the interest-only period. So I think it's important to plan a bit more carefully than it used to be for that reason, because you don't want to be in a situation where you've got multiple interest-only loans expiring at the same time and you suddenly find yourself having to pay principal on all of them, and maybe you can't afford to do that. Now, under the current lending laws, if that's the case, you should never have been given the loan in the first place. But the way loans were assessed in the past was under different rules and different policies. So, given the way things have changed in the last few years, I think it's prudent to reassess. And if you want me to help you do that on your individual investment property portfolio and investment lending portfolio, please get in contact with me, having first researched what your interest rates are, when your interest-only expiry dates are, and then we can get into what's going to happen when you get to the interest-only expiry point and what we can do about it. I hope that helps, and I look forward to talking to you soon. Thanks.